What's up, G's? Today is a new video in my YouTube channel talking about the new model that ICT talk about, 2026 model, which called Venom Model. This model is using basic ICT concepts without the volume profile like I used to use it. So, let's go into it. First of all, ICT Venom trading model is the latest trading strategy introduced by Michael ICT. This trading model is specifically designed for the US market index, like the US Tech, US 100, US 30, and US 500. So, there is basics or principles to be this model as valid as it is. So let's get into it. First of all, we need to specify the dealing range or our range to get this model. So the model, you can find it from 8 a.m. double point. Let's say 8 a.m. New York time till till 9:30 before the market index. So what do we want to look to be this model valid? The Venom model is based on the liquidity sweep, which is if you are bearish or bullish, you need to mark up the high and the lows of the pre-market session. For example, we have price coming from 8 a.m. like they're creating intermediate high, then creating intermediate low, then range in between them. Then if we are bullish, we need to sweep this low, intermediate low. So we look for sweep there, then a break of structure. Now we look for our point of entry, which is PDRA, fair value gap, or CISD, change in state of delivery. So we mark up previous and discount and take out data high. This is a Venom model. Market structure shift here. And liquidity sweep right there. Mark out the buy side liquidity or data high. This is our Venom model. So let's go into the chart and retest this model on the Nasdaq for the market today. So let me delete all of this. So we got 1 minute. So we mark out our dealing range, 8 a.m. Here is 8 a.m. and 9:30. 9:30. Where is it? Where is it? So (8 a.m.). So we mark out the low of the 8 a.m. created, which is right here, the sell side liquidity. So basically what we said, we need to see a liquidity sweep, which is occurred for this low, intermediate low. Then we look a break of structure to the upside. So here is break of structure, market structure shift. And then we look for CISD or our point of entry, a fair value gap, an IFEG inversion, or a CISD, which has happened here, a CISD. The model is actually printing. We mark out the data high, the buy side liquidity, and here is our point of entry. Which is, the model is actually printing. What we actually need to know, there's people trading it after the 9:30. For example, let's see, the 9:30 open, we need to wait for the index market open, which is occur here. So basically same as the model here. We mark out the high or the low. We have a buy side liquidity here. Got swept. Then we need to see a market structure shift, which is occur here. A market structure shift to the downside, which is indicate us we are bearish momentum. Market structure. Then we need to look our point of entry. So from this high to this low, we need to mark out the premium and discount the zones. So we need to mark an FEG that occurred in our premium if we are bearish, and discount if we are bullish. So the price respected this premium PDRA, which is premium fair value gap. We took our entry here, shorting, stop loss above the order block, targeting the buy side, sell side liquidity. And here is it for our just using the Venom model that ICT talk about. That easy, make it simple, and I hope you like it, guys. Thank you for watching, and I will share every information that I have in this channel. Thank you, guys.